wee jụọ ya na ọkwa obiro na ya daa ndị a mekọrọ akwụ ụgwọ si ha kpọbi ụmụasị a na ọmara akwụ ụgwọ na ụfọdụ nwere ọkụ dasị ya na o disconnect n'ọya disconnect bụ iwu kọmpanị na Mọnde meji na-akọta ya na ụfọdụ nwere ọkụ na ndị ọ na-atiri ọkwa na ọ dị ilega nini ilekọ ọkụ mmadụ niile na akwụ ụgwọ anyị so abịazie na-adị ka mmadụ na yesterday I was looking for mkpọrọ ha na phone inside the office gwa ha na gwa ha na abịa asị na disconnect wires so na mmụọ esoro na ndị a disconnect wires na direct to people na mmụọ esoro asị njerite akwụkwọ njem akwụkwọ gosi ha afe tinye ọkụ n'uche na ndị eyewe inyochapụ njike.
Good evening and welcome. Please, let's give the next 3 minutes for others to join us. It'll be 9:05. This is 9:02. We are listening to Trump.
Our innovation to nations who seek to reduce their CO2 footprint to learn.
Eat, not later you start looking for tea. Open your mouth. Open your mouth. Don't pour it out, so you pour it on the chair, and I'll not like it, I'll flog you. You come this way.
Really abdicating that role as leader.
Before others join us, welcome, good evening. Who took these trades? Remember what we did yesterday? We drew this Fibonacci on 1 hour yesterday. I don't know who asked the question. We did this drawing and it came back to 50%. I joined here, it took up here. When it formed this, I left. It came back again and at least at 61.8%. You can see that we are now, the bulls are trying to score a point here. They want to break up here. So automatically our projection was correct. AB equals to CD. Meanwhile, our CD on daily time frame, remember, AB was equals to CD. This is our CD in our projected D on the daily time frame. But that is not the issue for now. The issue for now is that we are between 1.3600 and 1.3387 or 3370. This is the current trading range. Current trading range between here. I'm talking about support and resistance. The current support and resistance we have our current support and resistance is here, giving us a current range. The current range we have at hand to play with, the identifying support and resistance is between 200 pips. So far, this on daily, 200 pips range. So far, we are expecting the non-farm payroll to help us achieve this one. We are expecting the non-farm payroll to help us achieve the current range by breaking out. Otherwise, that the non-farm payroll should help us take away this A. Where A and B is still intact, all eyes is watching for D. Remember, AB is equals to CD. This is the analysis we did thing at the beginning of the week. And this one is where we started buying USD Canadian dollar. We sold here from the 5th of May. And when we were selling, I remember that in that video of the 5th, if you check my page, you see the video that we did on the 5th of May. You see that we were expecting USD Canadian dollar to turn anywhere between 50 and 61%. And that occurred here. It has moved up. Yesterday night, I remember either Mr. Kufre or someone else asked a question. Can this fabricate? We were in 1 hour, he asked. Now that the thing is going up, while we were in, this occurred. He now asks, while this is on, as it's retracing now, what should we expect? I now place this Fibonacci tool here. I now said, let's watch out for 50 or 61.8. you can see that it has given us 50, it has given us 61.8. When it was 50%, I signaled on every chat room I belong, and it gave some pips, which I actually joined. I exited again. I joined the one here. The time it came to 61.8, I was not online. I just came to meet this one online. But it has come to 61.8 finally. And it is now, I'm happy it is scoring a point while we are together. I'm happy it's scoring a point while we are together. Please give me 2 minutes. Let me look for a better location for you. Sorry, I have visitors in my room. I'm looking for a better location. I have visitors in my room. Looking for a better place to stay. Let me show you my trading room. See the trading room. See what we have in the wall. We have the candlesticks formation. This is the bullish candlesticks, and this is the bearish. Which one is bearish? Well, you can see all of them pasted on the wall. This is where we do our training. So I've left my room. I'm now at the conference room where I'm using for training. This is our whiteboard. Okay, so let me stay here. It will be better here. Please get me my notebook and just my notebook. I have my pen. The blue notebook, yeah. Okay. Yes, thank you very much. I'm happy for we having something to show. This is how to trade the Fibonacci ratios or retracement tool. Fibonacci is big. We have Fibonacci tools, not one. Which of my screen are you seeing? Okay. We have Fibonacci retracement. We have Fibonacci time zones. We have the fan. We have the arcs and the expansion. These are all tools of Fibonacci, and this is what makes Fibonacci tools so outstanding in the market. It is a complete trading tool. But since we cannot attain the level of professionalism in the first day, we are looking for a trading system that can make Forex trading as simple as ABCD, where AB equals to CD. And for you to succeed in this, please, you need the knowledge of support and resistance. This will help you to know where you have to play your games from start to the end. The knowledge of support and resistance will help you to know where to start the game and where to end the game. Before you come to ABCD, you need to have the knowledge of trend, because it is only the trend that helps us to know where to place A and B while waiting for C. It is only the trend that we discovered that helped us to be sure as at last night that when price was here, someone asked a question and we now place these two, A to B, and we were expecting our C around 50 or 61. I remember that this stop loss from this trade was a trade I entered from start. This stop loss was brought somewhere here. When I discovered that 61 was here, I returned the stop loss here. That's why it came down and did not take me out. It has now gone up and I've moved the stop loss again. Both trades. This one entered this night when I came back. Both trades. I entered this one when I saw the morning star. 1, 2, 3. 1, 2, 3. Morning star. When I saw the morning star, let me show you the morning star. When I saw 1, 2, and 3 giving me a morning star, I entered. The one I entered in the afternoon from 50%, I was out in profit. When I saw this engulfing pattern, I was out in profits. The second one came to 61.8. I wasn't around. But what I now saw was the 1, 2, 3 giving me a morning star formation. I joined again. And since I joined, you will see that I am already, let's check, 25 pips in profit. And the lot size here is 0.51, meaning that I'm going for $5.10 per pip. So 5 times 25 should be the amount I'm already into. I'm not exiting this trade. Remember, why I'm so comfortable to be buying is that I am still within the range of support I saw and the resistance up here. So instead of that, I have my price. I expect to take all my profits here and I'm ready to buy, sell. I'm ready to sell my sell limit here. I may decide to change my sell limit closer to the resistance. I don't care. All I know is that I'm staying within the support and resistance. I promise we'll discuss the new non-farm payroll today. We have to discuss about news because we have the biggest news tomorrow. Mr. Trump has just finished speaking today, and he spoke on, remember yesterday I discussed USD, Euro USD, 1250. Whatever it was buying, we were ready to be selling. This should be, I've closed like 2 positions, remaining these ones, selling from 1250 because I know that the resistance here is at 1.1300. 1.1300, and I've seen that today's daily candle is about giving us a dark cloud cover. In the next 1 hour, it will close. Already we had a dark cloud cover here, and today we are having about another dark cloud cover here. So this is how simple we make it done. Firstly, for those that are new to the business, I'm thinking of how to start to favor those that are new to the business entirely. I will still recommend that you watch. I sent you a, okay. I saw it not quite long ago. In the afternoon, I have a lot doing both online and offline, and all centered on Forex. I don't do anything else apart from Forex. That is all I do. So I check my mails at night. I check my messages when I'm free to check. But the important, that's the essence of me teaching you here. It is only online that I can reach out to as many as possible at the shortest possible time. If I'm not online, you cannot get me. If I'm not online, I'll only be with a few number of persons at a time. But if I'm online, I can be with more than 50 people at the same time. So it is online that we can do it. I had been doing this and I'll still do this. So one-on-one session with me is what we are having at hand. Rather, any question you feel I should answer, remember that this program is mainly for total novice to Forex, people that know nothing about Forex. Don't mind the number of persons in their house. I'm happy we are not too much today. Please ask any question. Type it on the chat room. I will endeavor to attend to your question. Otherwise, that it's not easy having me even on phone call. It's not easy having me even on phone call. I've not been to the trade house in Abuja for 2 days because I was online, 24 hours online, talking to different people, chatting with different people, sharing my trading ideas with people, and sharing the screen with others. So that is how far I am able to help others or to contribute to the business of trading. So in this scenario, I'm trying to see if everybody can understand the business of trading as simple as ABCD. As simple as ABCD. That is why I'm showing you this. And I'm happy that we have been able to have a pair. We started following from the 31st of this 1 hour. Okay, sorry, let's go to daily. We started following this trade, USD Canadian dollar, from the 13th of April. This is when we started following. When it came to the 5th of May, we sold. And there is a video for the 5th of May. Check on my Facebook page. There's a video. Remember that we were to sell this. That was when we drew this Fibonacci tool and indicated AB and expected C any place around 50, 61, or 74, 78.4. And now it came to C. When it got to C, I was on Zoom session when I told people that we should expect to start buying USD, Canadian dollar, any price from here. And fortunately enough, it has started moving towards our projected D. Remember, in sequence, 50, 61.8, and 78.4%. These three are combined together in sequence with 161.8. With 161.8, meaning that whenever price retraces from 50, 61, and 78.4, the next target should be 161.8. If you cannot edit your Fibonacci tool to give you this 78.4 or 161, what you can do is to use the trend line. This is the trend line. You touch it, you see draw trend line. Draw trend line. Pick the trend line and place it here like this. This is the trend line. Place it from A to B, or should I use it? Let me draw it with you. Pick a trend line. Place it from point A. Where is A? A is the beginning of the current bullish trend that started retracing. We want to know if it is a retracement or if it is a reversal. We have retracement and reversal. We want to know if this is truly a retracement or if it is a reversal. How do we know if it is reversing? If the trend is reversing, it must take out A. What happens here is that it will not recognize 61, 50%, or 78.4. It will break down, and when it comes to A, take note if A is still respected, by coming to A and form a bullish setup, it means that the price had given us double bottom. Double bottom in chart pattern is a bullish signal. But the difference in the sequence is that if it takes off from 100%, giving us double bottom, our projected D will be at 0.0. If it comes to D, C at A, it means our take profit is back to 0.0. We are not expecting a higher high. We are not expecting a higher high. Take note of that. So when you want to place your Fibonacci 2, you consider the current bullish trend that has formed a bearish setup. Place your Fibonacci 2. Let me start afresh. Let me take the tool also out. Let me place it afresh. Please take note. Take note. This is the 2. Pick it up from here. The beginning, the lowest low that begins this current trend that is going up. This is A and this is B to the highest high. And take note, it is not from here. This one had already formed its A, B, C, D, A, B, C, A, B, C. There's no D yet. It's coming back here to give us A, and we are taking our A here. The current movement that had given us, let's see this one. Don't worry, let's take it together. Let's take this together. Beginning of this, A, B, let's see. A to B, fine. Can you see the former one before the current one? When we are done with this one, we are okay. A to B, and it gave us C at where? It gave us C here. This is 61.8%. The former one was A to B, gave us C at 61.8%. I don't want to change my colors. Now this one is done. Another A will be the former C. So when A and ABC is achieved, C to CD becomes the new AB. CD is the future AB. Former AB and C, then D. When D is achieved, you started retracing, you delete the former Fibonacci 2, can take it one by one, any time frame, even if it is 1 minute, is the same thing. AB, C at 61.8, it gives us D. When it gave us D, we have taken profit. When you take profit on D, because this guy has given us a bearish setup called bearish engulfing pattern. When this candle engulfs the former candle, it means that we are about to sell. What you do is to delete the former 2 and bring in a new 2 where CD becomes the new AB. When you get the new AB, while the price was here, if you decide to sell counter trend, you'll be selling towards 50 or 61.8. Take note, and your stop loss will be outside B. I suggest 10 to 15 pips outside this level. Your stop loss should be outside B. Stop loss should not be inside. Keep your stop loss outside this level, about 10 to 15 pips. While you are selling, take note you are not selling back to A. Let your own area of concentration be at 50%, 61%. Don't expect 78.4. It do come, but don't expect it. Let your concentration, in fact, let your take profit be at 50%. Even if it will take up to 61.8%, let that be an additional pip you never expected. Be conservative, don't be too greedy, because it could turn at 50%. It could turn at 50% and go back to 38.2 if you understand price action. The Fibonacci tool gives us 38.2 to 61.8. There is a game that always plays out here. There's a game between 38.2 and 61.8. Some people trade this as support and resistance. In case the price wants to range, they will keep selling here, buying here, selling here, buying here. So why I'm saying that is, take your profit at 50%. If you want to stay beyond 50%, add, move stop loss, then move to 61.8. If you can stay till the end of this movement, that is your own additional peak. Don't expect to make all at once. When we are back to 61.8, please start looking for any buy signal from the candlestick. Any buy signal from the candlestick. When the candle says you should buy anywhere above 61.8 or 50%, place a buy order. And you should be expecting to make AB being equals to CD as your target. So at that, how do we get AB? Without having a tool editing your FIB to give you 78.4 or 161, you can do it as this. Pick your trend line, pick it from point A to point B, double click on it, pick it up, place it from wherever you have C and have your projected D. It's not necessary that it must be D. If price can go above this D, price can stop within this D, but at least you have a projection. You know where you are looking at. You must have somewhere you are looking, you are expecting price to be. Please, this is the rule of Fibonacci, and I'm not sure, I've not seen the differences. We were together last night. I expected everybody that were yesterday's class to make money from this trade today. See the trade today. We started this trade April, and we are following it up according to the trend till today. Yesterday night, we had this, and we had this. A question came either from Kufre or whoever, and we had to place this at 1 hour time frame. And we were looking for 50 or 61%. It came here, it returned up, it came back to 61.8. Now you can see that the bulls have scored a point. What do you mean by bulls scoring a point? The bulls have taken price above B. So the price had already formed a high higher than the previous high. So when a high is formed higher than the previous high, we have achieved, the bulls have scored a point. Your mind is now at rest. At least you are sure that we are still in a bullish trend. So what we are expecting next is to see our projected D according to AB equals to CD formula. We are expecting our take profit anywhere at 1 hour. That was daily. At 1 hour, I'm expecting my take profit here. And you can see I have a take profit order already. I have my take profit already there. And I'm ready to sell back from the top. We buy low and sell high. Why I'm expecting to buy, sell again at this price, I'm expecting to see price do the same again, giving us another C, so that I'll move my AB and make this place A and a possible B. And a possible B, looking for C again. Now having C, C must likely or may likely come back to this former level that we broke out. Former resistance becomes future support. C might likely, in this movement, let's see if it is true that AB equals to CD. CD, the retracement would occur anywhere around here. This is 97 pips, call it 100 pips. It can retrace back to 50 pips, 50, 50. Okay. You can see that 50 pips is former resistance becoming future support. Former resistance becoming future support. That is how simple it is to trade the Forex market using ABCD formula. Very simple. It doesn't take time. It's not stressful. Let me check the chat room. From the Fibonacci retracement you are drawing, you are considering shadows of the candle. Am I right or seeing well? How did you learn how to make this analysis? Wow. I'll answer those questions. Thank you. Yeah, I draw my Fibonacci. This is the low. Let's discuss this. I draw the tool. I place it from the lowest low or the low to the high. From the low, the beginning of this trend here, that was now forming a bearish setup. One will be confused. Is it that the trend has finished? No. As far as the trend, the bears have not scored a point by taking out the low. We form higher high, higher low, higher high, higher low. When this occurs, what you can only use to know if the trend is reversing or retracing is to identify the low and the high of this particular movement up. When we consider low and high, there's no way you will not consider the wick of the candle. How? Because touch this candle now. If I touch this candle, check down the MT4. Look at, when I touch this candle, please check around this place. See this place that is empty. Just check this place. You can see my cursor. About where we have the signal, the USD card, just this around here. You see that some things will be written here. These boxes will not be empty. And we are looking at where this candle. When we have that candle, can you see the low? L is for low. L is for low. L is for low. H is for high. C is for close. Volume, the time of that candle. Now I'm looking at the lowest price. Okay, we are talking about this candle now. Let's check this candle. This one, this doji. This is a doji, in case you don't know. This is a doji. So let's check this doji. The L of this doji is 1.3436. 1.3436. That is the L. L is for low. Every candle, remember, if I did not mention the first day, remember that I said that every candle has what we call OHLC. O for open price, H for highest price, L for the lowest price, and C for the close price. Now, here is the doji, the candle we are looking at. It's even showing here. The low is 1.3436. If it doesn't show here, check down here, it will show. It will show 1.3436. That is the low. That is where you place the A, low. To the high, which is the highest, let's take this one. The high is H, 1.3522. That is the H. That is where you place your Fibonacci A and B, and watch out for C within this 50% or 61.8% retracement. And you now look at AB equals to CD. Am I understood? Who asked the question? Have you understood have you gotten the answer? Please, let's keep.
So, Mr. Van, hello,
Yes.
Mr. Van. In other words, what you are saying is that this trade is still bullish.
Yes.
Yes, ma'am. The trend has not changed.
But is it late for one to still enter the trade?
You cannot enter at that point.
Okay, why?
Because there's no entry price. There's no signal.
Price. Okay.
There's no entry there. The last entry, we had an entry here, which is bullish engulfing. We now have the last entry here, combining 1, 2, and 3, called Morning Star, which I entered here. If you miss an entry price, please don't go to that trade again.
Okay.
What you are watching for in the market is entry and exit. Exit in two ways: exit in profit, exit in loss. That will help you to calculate your risk reward ratio. You don't just jump into, no matter how big this MT4 platform is, we don't just buy and sell any place. The market has an entry price and has an exit price. If you miss the entry, don't go again. If you miss the exit, don't go again. If you miss the exit, it's either your trade will return back to negative or return back without you making money. But if you buy at entry, exit at exits, buy again at entry, or you sell here, exit, buy here, exit, sell here, exit, buy here, exit. That is when you will make money. You will not make money staying in the market. It goes to A, B, C, D, no movement, nothing. That's why day traders or swing traders makes more pips and makes more money. If they use this tool, they will make more money than position traders, because they'll be having multiple open and close, while position trader opened a trade and allowed it run for like 3 months or even 1 year. Position traders open trades and allow it run for a year or for more than 1 year. This is hello? Okay, thank you. So a day trader, if you use this tool, you will make more money than because you'll be buying. See, we bought here. Let's see where we started buying this. Let's see where we started buying this. We bought here. Up to this point, we bought here. Remember, we bought this from here. 500 pips. And at this point, this place, the harmonic pattern scanner gave us a sell, and we sold from there. While we were selling, the day we entered this trade on scanner on a webinar, check the video on my page. I discussed about 61.8%. And when it came to this place, I now went to the scanner again and saw a buy signal exactly at this current price, and we started buying again. So we bought 500, we now sold. Remember, we sold from here. You'll see this candle, this daily. Let me check 4 hours. 4 hours, 4 hours. Let me see where I've sold. At 4 hours, this is here. I've not cancelled it. This is where I sold at 4 hours. I use a counter trend line crossing from here to here, waiting for a breakout and retest. It broke out, it retested here, gave me a setup that I started by selling from here, and we sold from there. looking for 61.8%. We exited the trade here. It gave a bullish signal and moved up and came back below 61.8, not even up to 78.2, and returned back into 61.8 immediately. Immediately did this, we started buying again, and this is the buy. This is the current buy we've entered, and I've taken out all the stop loss up to this point. Close partial profit, move stop losses. I use the counter trend line. If the price breaks out this counter trend line, which it did, and retested here, and gave me what we call, these are candlesticks, I'm trying to identify them for you, tweezer bottoms. 4 hours, tweezer bottoms. At these tweezer bottoms, we had to buy again. It went up even at H4 and has retraced back to give us A, B, C at 61.8, and we are heading for D. You enter at A, you enter at B to C, you enter at C to D. Don't enter in the middle of the road. You don't enter anywhere. You have to look for an entry price. When you have the entry price, you are good to go. I've answered your question. But don't forget that we do our analysis based on what we see. You will not see this one again, it will be clouded there. I draw lots of lines on my chart. I draw lots of lines. But as at now, the bulls have scored a point here. What else do you want to see? The Fibonacci 2. I hope
Alban.
Yes, sir.
Good evening. First of all, this is Virtue speaking. Having seen what you've done, is it always accurate that it will always respect the Fibonacci analysis? That is, if you put your where your cursor is now, that's the A. Then you take it down, that's the B. Now we are waiting. We are waiting for it to get to C. Will it always go to that C? That is the 61.5 or the 50%, the 50.0. Will it always get there?
It may not get there because we still have 623.6 in most cases in terms of volatility. But the one that is standard, the one that is more often, the one that occurs most, the one that we know, and every trader, both from the stock exchange market, both from portfolio manager, hedge fund managers, even banks, the highest way they trade, the best way of trading is this. It is very simple at that level. It's only at our level that trading is very difficult. 50% is most occurring, 50, 61, and 78.4. This is based on sequence. This is based on Fibonacci sequence. Fibonacci is part of everything, even the keyboard, the piano we play, the arrangement of the white buttons and the black button is arranged on the Fibonacci sequential order. That's what gives the sounds. Those that do that knows that they're still using Fibonacci formula to arrange the keyboard to have the sound. If I want to give you advanced course on Fibonacci, you see that it is in everything we do. Even our facial, even I believe the immigrations are even still using that same theory to identify people's faces and know where they should come from. Because Fibonacci is part of the advanced training when it comes to identifying people. Look at someone's face and tell where that person should come from. It is still a theory from the Fibonacci that we can use to know that. Now, when it comes to sequence, 78.4, 61.8, and 50.0 are just 3 of them are 1. They are equals to a sequence. So the next number next to them is 161.8. That is the formula. So I don't know any other method to explain than when price comes to 50%, it will return. Price can stay between 61.8 and 28.2 and do what we call consolidation. But as far as the trend here is bearish, as far as the trend, higher high, lower high, maybe double top, still lower high, we now had a trend drawn, a bullish trend line, a bearish, view the Fibonacci 2 from top to down. We are now expecting price at least 50, 61 or 78.4%. This is how we acknowledge trade. Now, but let's see the long. I've answered your question.
Yes, you have.
Okay.
Yes, sir, you have.
Always expect it about here. Always expect it there. Anyhow, always expect it here, between here. So if you are buying, try to take profits anywhere here or start managing your open positions here or here or 74.8. These 3 numbers are 1 in terms of sequence. They are paired together. The sequence is written 50.0, 61.8, 78.4, 161.8, so anytime you see price here by sequential order, it is going to 161.8. So at this point, this is where we expect price between 50, 60 or 78.4. Though our take profit is somewhere here, it doesn't matter. When price starts coming to 50%, I'll become wise. Comes to 61.8, there's no way my stop loss can be below anymore. See this trade, I dropped it on chat room. It has gone how long? It has gone 30, only 30 pips. Meanwhile, we are expecting how many pips? At 50%, we'll be having 196 pips. At 61.8%, we'll be having 248 pips. Why won't I stay at take 250 pips and leave? The problem we have is that we can endure long rate positions. That rate position will stay there, and anytime it comes back to profit, you close it at $1. Meanwhile, you endure $150 or $200 negative. When it's coming back to profit, you close it. Why does your trade go into red? Because you come to see that, hey, USD CHF is selling, oh, this is very fine. You start selling. You just place yourself and price is just turning back looking for C. You just came to, oh, it's selling. This is a very nice trade. Look at me, it's selling. And you start selling at this point. When you place yourself, the price turns. And you think someone is watching you. When you place the trade, he turns the price. That has been the feeling from since April. The price is turning because it was to turn. It will be looking for C, and the lot size you use did not carry it, and your stop loss is still within the range of A and B. Stop loss should not be inside this box. Please take note. Price has the right to do anything inside this box and will not change the trend. Stop loss should not stay inside A and B. Please take note. Stop loss should be outside A and B. That was why yesterday we saw this at 1 hour. I said if we are buying here, as we are selling from here, our stop loss should be out. This is 1 hour. And if the price gives us C at 61.8 or 50%, that our stop loss should be outside A, which is about 44 pips. 50 pip stop loss is not a bad stop loss. 50 pips stop loss at $1,000 equity. You are using 0.04 lot size. 50 pips stop loss at $500 equity. You are using 0.02. At $250 equity with 50 pips stop loss, you are using 0.1. Anything less than 200, no risk management ratio, no calculation formula, no lot size for you. At 50 pips, at 25 pips stop loss, you can use 0.08 at 1,000, 0.04 at 500. Based on the formula we did together here, you can check the past videos, you will see it there. Keep trading system simple, very simple as A, B, C, and D. You don't care whatever happens. If it turns, it doesn't matter. I've blocked my profits here. All the stop loss for this trade are already up here. I'm happy that we have scored a point. We have made a high, higher than the former high. So I'm not afraid. I am not afraid. Even if I decide to go to 15 minutes, I'll still be looking for C, and I'll still be trading C. I'll still be going for C. I don't care. I'll still be looking for my ABCD. And I'll still be going for C, even at 15-minute time frame. Fibonacci 2 is in everything. AB. I'll still be looking for my C. C, the 50% is former resistance. C, 61%. We have not done anything wrong. The important thing is that we have scored a point. The bulls have formed a higher high, higher than the former high, higher than the former high. This is a bullish trend. We don't care. I may decide to sell this. This is an evening star. Bearish, bullish, indecision candle. This is an evening star, the three of them. I can sell an evening star as it is shown here. An evening star is a sell signal. But selling the evening star, I will still come to wait for my take profit somewhere within. Let me check which one is this. Okay, 50%. I'll look for my.
So right now it is selling because you've seen the evening star.
At 15 minutes, yes. That does not change. At 15 minutes, we have seen an evening star. At 1 hour, we've not seen anything yet because the current candle has not closed.
Okay.
The current candle is not part of your calculation. It could just be a temporal thing. It could be after this evening star had formed, price had given how many pips? 7 pips. It could return back. This is former resistance and a support. It could just come and retest this place at maybe 8 or 9 pips. That is not the one we are looking for.
Alban.
Yes?
Alban. So if someone needs an entry point at a particular time frame, we can choose the lesser time frame to check if we can enter trade. For instance, from this 1 hour time frame now, we cannot enter again, but when you check on 15-minute time frame, it is showing an entry point. At that rate, we can enter trade and forget about the 1 hour time frame that we cannot enter again at that point.
Okay. Yes, sir. Let me answer the question. I speak on multi-time frame analysis. I still emphasize on multi-time frame analysis. What I mean there is that on daily, let me delete some of these things to avoid noise, so you'll not be confused. To avoid this, or not to be confused. Don't mind this guy. See, it has gapped. It has gapped how many pips? It was rushing to close the day. It has gapped. There's a gap here. It will fill the gap and continue where we want to go to. It wants to acknowledge this level of resistance. Former resistance becoming future support. That's how price works. So now, this is at 15 minutes. Let me answer your question, sir. We will have set up at lesser time frame earlier than the bigger time frame. For instance, if this at the close of, let's check what candle closed by 10 a.m., 10 p.m. candle. 10 p.m. candle closed as any signal here. See a piercing line. I don't have a signal here yet. It's up to 60%, but it is on top of a resistance. Every sell signal on top of a support, former resistance becomes future support. Any sell signal above on top of a support, I will not sell. If this setup was below this level of former resistance, I will be selling. That is one policy I have in my trading strategy. I have it. I say I will not sell.
Sorry, come again, sir.
You ignore price, even if you know candlesticks very well. You have to ignore candlesticks formations that tells you to sell on support level. You only sell below a resistance. You only buy formations that tells you to buy, and the formations are on top of a support level. Am I understood?
Yes.
So this is a bearish setup, but this is former resistance. Former resistance. I cannot sell this here. Rather, I can wait for it to close below this before I sell. So I am not selling this because price has just broken out here, and it is possible to come back and retest this place, this resistance, making former resistance become future support. So that is one. The question I was asked earlier was, if I'm looking for a straight setup, I now go to monthly time frame, I follow the trade from monthly, follow the trade from to daily, and now look for an entry price at a smaller time frame so that I'll be able to have the smaller risk. I think that's the issue of risk. Because at 1 hour time frame, we were able to have our stop loss outside A and even outside this support level, and it was only how many pips from 50? It was only about 50 pips, only 50 pips. This is where your stop loss should be. Don't manage stop loss, rather manage your lot size. If you manage stop loss, you will be struck out of the market and the price will return and go at the direction you saw earlier. You saw it bullish, you want to buy, and you keep your stop loss within A and B. Please, stop loss should not be within A and B. All stop loss should be outside A and B. If you are selling outside here, stop loss. If you are buying, even at C, please, the safest place for stop loss should be outside A. And if you are using this tool at the smaller time frame, like the 1 hour we are using now, can see that our stop loss outside A is still less than 50%, 50 pips. Even outside the known support level is at 50 pips. 50 pips stop loss going for AB to AB equals to CD. AB was how many pips? AB was 85 pips. So risking 50 pips for 86 pips is not a bad deal. It's about 1:1.5 or 1:1 point anything. Meanwhile, you are there to take out risk by moving stop loss.
Hello, sir.
Okay.
I think the screen is blank. The screen has gone blank.
My screen?
Yes, please.
Yes, sir.
Wow.
Yes, it's blank. It's blank.
Can you see the screen now?
Not yet, sir.
Face, sir.
Okay.
I can see.
Sorry? Please remember, I want to discuss new today. Fibonacci retracement. How did you learn it? I want to discuss this today.
It's really very, very bad because that has been
Okay.
Thank you, sir. It's back. Thank
you. Okay. So this is how to trade the two. AB is equals to CD, meaning that we risk 50 pips if we are entering as C. Remember, we took 80 something pips, we took like 50% retracement, that's about 40 pips, and we are now going back for a C. My battery is low. Let me go to my room. Please permit me to get to my room. I had visitors, they are gone. Yeah. Let me stay. Ooh. Okay, thank you. Image the TV. Okay. This is Fetuka raising his hand. So where did we stop? Please, I would love questions. Any new person in the house? Is there any new thing you want to know? This is I wanted to show you our analysis on USD CHF, US dollar Swiss franc. We did this analysis here since last week in the training session in our live trading room. We did it and we were expecting this to happen. How do we do the analysis? I want to keep doing this analysis repeatedly every day so that one can actually master it as we do it together, because it's easier to learn by imitation than any other method. Learning by imitation is the fastest way of learning. So let me see, apart from the current trade we have, let's see how we can get USD CHF analyzed. We started from the scratch. We have to know the trend. I want to know the trend. I'm looking for trend. Just write it down. I'm looking for trend. I'm looking for support and resistance. I'm looking for trend. I'm looking for support and resistance. What's your compass? Okay, give me water. You have water, eh? Check. Or you collect it from me. We are looking for support and resistance. Support and resistance is very much needful. We need the trend. When we know the trend shall set us free in this business, because the trend is our friend. As a trader, we don't have any other friend than the trend. Every other guys are artificial. It's only the trend that is our friend. That is the first mentality as a layman, as a whatever you may call yourself in Forex. The trend is first. When you get the trend, you've gotten it. And remember I said it, any trading system that can give you the trend, either as the trend is about to move, or any trading system that can give you the trend as the trend is about to make a U-turn, or any trading system that can tell you, wake up from sleep, we are about having a new trend, now a trend is about starting. Please value that trading system. Value that trading system. Any trading system that cannot give you the trend, let me list out again. I've mentioned it before. What are you looking at in a trading system? You are looking at a trading system that tells you the trend. Number one. Number two, your trading system must give you entry and exits. Exit would always be two. Exit in profit and exit in loss. Your trading system must be able to help you enter trade when you are supposed to enter and exit when you are supposed to exit. Otherwise, that your system is not complete. It is your position to manage the risk by knowing how much in percentage of your investment equity you are exposing to risk. You must consider all those things. That is one. Now let's see what we had for USD CHF. We start from the monthly charts. We are looking for trend. We are looking for supports and resistance. We are looking at the bigger picture. We want to see the bigger picture. When we get the bigger picture, we can actually tell what these small boys are doing. When we get the bigger picture, these small boys will not misguide you because the trend is decided by the bigger boys, the bigger time frame, or the bigger, how do we call it, bigger picture. You must get the bigger picture first of any product. Take note of this. You don't need to trade all the products in the market to be successful in Forex. Most successful traders trade one or two pairs. If you ask him, he tells you his currency pair. You tell him about USD, he tells you he doesn't trade USD CHF. It's not even in his charts. That in his chart, he has only 3 pairs there, and he always trades, he trades only that 3. You need to be at least a master of one, not jack of all, master of none. I don't know if you understand what it means by being familiar with a particular pair. Know all its behavior. That is what we call price action. You know the body language of price. You know how it used to behave. You know how it used to do. In non-farm payroll, this is how it used to be. You will now be able to know amongst the currency pairs which one returns at 88% retracement. That this other currency pair mostly turns at 50%. And there's a particular pair that mostly would love to break 61.8 and like going to 78.2. You should be able to know there are differences. All currency pairs are not the same. You should be able to know the most volatile currency pairs in the Forex market. Most volatile, but 4 of them, you must be able to know them. And if you want to trade them, please, it's not the same strategy for Euro USD. It's not the same strategy for pounds, but the same trading system. You need a different strategy. Modify your strategy. Learn to write it down. Learn to make it a rule binding you. That with this trading system, when it comes to Australia, New Zealand dollar, hey, this currency pair, my stop loss cannot be close by. You also need to understand that trading is also seasonal. The market sentiment this week all lies on tomorrow. Non-farm payroll. I'll be online if you care. The times I think of dropping link, but tomorrow I'll be at the trade house. I'll trade at the trade house with my people tomorrow. We'll be at the non-farm payroll at the Abuja trade house. I don't know if I could connect online. We trade non-farm payroll. We don't run away from it. If you run away from risk, you don't make money. The highest thing you do is to create another trading account, take in like $500 or $1,000 there, get ready for non-farm payroll. Opening a trading account is not a big deal. Just create a new account, move some money from their main account, get into that account and let that account be there for news, like non-farm payroll, like FOMC. It's easy. And if you get that done, we can trade non-farm. You have to understand price such that you know that when it comes to NFP, this is what happens. It likes doing this. So when the price is moving this way, you know where it's going next. I was here last night at Australian news. I looked at the pace. I looked at the one that will give me the highest volatility. I moved to Australian New Zealand. It moved down, I kept quiet. When it moved down, I placed a buy stop. It returned back and picked me into the buy, long into the buy at 2.0 lot size. I closed partial profit, 1.0 lot size. It moved again, I closed 0.05, 0.5. It moved again, I closed 0.25, remaining 0.25. It started returning, I closed all, I left the market. It returned back to its sell level. That's how to study currency pair and know what it can actually like doing at a given time. So you don't need to study 20 currency pairs at the same time. That's what I'm trying to emphasize here. Get a currency pair, 2 or 3 or 1 at a time. One thing at a time. If your trading system gives you the beginning of a new trend, please follow that particular trend, even if it is 5 years. That's when you buy your car, build your house, because you are following a trend. The trend is your friend. If you succeed to catch a trend as it starts, that is when you'll be able to know when it's forming A, B, C, D, A, B. You will not miss any of the movement. You will not miss A, you will not miss B. You will be buying AB, selling CD, buying AB, selling BC, buying CD. You will not miss any one. So your system must be able to tell you the trend is changing or the trend has changed. Let's start analysis before I proceed. Let me start an analysis. Let's do this one. USD CHF, monthly time frame. When we are looking for trend and when we are looking for support resistance, it is not necessary that we need to see the candle. Learn to zoom out the candles. Can I delete this? Is it the one clouding that place? Okay. Firstly, I need to zoom out. I need the wave only. From the wave, you can see that the trend is bearish. Am I correct? Have you seen the trend is bearish? From the bigger picture, you can see that the trend started being bearish by forming a double top. Double top. 2000, year 2000, September 2000, and June 2001, we have a double top. 2000 to 2001, 1 year, we had a double top. September to June, not up to 1 year, but we had a double top. From this point, price started forming lower low, lower high, 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 making a double top. It did not score a point. The bulls did not score a point. They tried it. Rather, what happened was that this place was a support before, that it broke out. It has to retest that same level. It had to retest. That's a rule of breakout. That's a rule of support and resistance. Price had agreed with support and resistance that he will never break them. He will not come around them. So each time price succeeds to insult or breach the contract, it must come back and apologize and reconcile. Have that mentality. Price had broken support. That's an insult. It must come back. That is when the conservative traders have patience and wait, because patience remains the key. That price will come back here. And when it comes back here, that is when the the conservative investors will start investing their money again, forming higher high, higher, lower low, until we had the lowest low at 2011. From year 2000 to 2000, that's 11 years. So if you're a position trader, you should have made enough pips for 11 years with your equity making 11,283 pips. But since we don't have position traders commonly available here, what we now saw is after 2011, price started forming higher lows. Higher low, higher high, higher low. But now look at the problem we are having. Price is forming higher lows up to this point, but price is not forming higher high. Why? If it is a change of trend, forming higher high, higher low, but now we have triple top. What causes a triple top? The price is forming higher lows, higher highs, higher lows, sorry, but there's no higher high. This draws the attention of the market technicians, which is you and I, technicians here in this matter, comes to a meeting and say, why is price forming higher lows but no higher high? Can you see that there's a resistance there that does not allow price to go to form higher high, but it is still forming higher low? At this point, those that trade what we call chart patterns have just discovered that we are having what? A triangle. Sorry, not a triangle here. This is called an ascending triangle. Ascending triangle. Price forming higher lows, but no higher high. Giving us triple top, 1, 2, 3. And the bearish trend started since 2000 till this, and the price started forming something like a bullish trend. But the bullish trend does not have higher highs. We only have higher lows. At this point, every investor will stay out of the business and wait for the next action. That is at monthly time frame. We have established that price was forming higher high, is in a bearish trend. It's not yet changed to bullish. And we have established that price had formed triple top. That on the year,
Alban, the picture has removed.
there's no picture.
Showing again. Yes.
We've lost the screen, so
We've lost it.
Okay. Is it back? Is it
Yes,
back?
it's back. It's back. It's back.
Thank you, ma'am. When you do
please mute your mics. Mute your mics, please.
Okay. I've muted everybody. Okay. Now, if you are done, when you are done with this, you can go to bed and sleep. You can tell someone where you, what I mean is that you are trying to be familiar with a particular product. You just don't need to be jack of all. So this particular product you want to master, you should know everything about it, the history. You can even check these dates. What made this thing to crash? What happened this date? What happened? What is the sentiment behind US dollar and Switzerland franc that keeps this thing on a permanent kind of bearish trend? You should ask to know. You should be able to know everything about this pair and know about its family members, like the correlated pairs. That's how to be a master, at least one at a time. Second one, third one. That's how you should be. So now we have seen this. Let's move to, we have identified a resistance that has given us triple top. One on 2015, second, 2015 November, Third one, 2016 December. 3, 15, 16, and this is 2017. We are unable to break this place. This place was a support. See, this place was a support here. There's a candle rejected here. This was 2008. And let's check backwards. That place might have been, okay, let's take it from 28 as a resistance. And we now have a triangle forming here, connecting these to this, project to the future. Project to the future. You can now see an ascending angle. Ascending. Those are trade chart patterns. It doesn't matter that we have seen this. Now, let's remember what we are up to. This trend started here. This trend started here. This last one came to form a low, formed a low, high to low. And where are we? We are between 61.8% and 78.4%. That's where we are in now, in the monthly time frame. But since we don't have enough equity that we should be trading monthly time frame, we are done with this analysis at monthly. At least we have established that USD CHF remains bearish at monthly time frame. And at monthly time frame, we have been able to detect a resistance at 1.03446. We have been able to detect a resistance. We now move to weekly to confirm the trend. The weekly confirms there was a bearish trend and there is a retracement. The trend is not over until it takes out this high. There's a retracement up to still 61.8 and within 61.8 and 78.4. Take note of these supports. Former support becomes future resistance. 1, 2, 3, giving us triple tops. That is why price is forming higher lows. They cannot form higher high because this guy does not allow price to form higher high, higher low, higher high, higher low. So price keeps forming higher lows without higher high, a strong resistance. Has history 2015, 2016, and 2008. Even here, this is 2010. And that's how the history goes. History repeats itself. This gives you confidence that on the top side, there is a ceiling. This gives you confidence that there's a ceiling somewhere at the top. That is done. And you now know that this is a rise, an ascending angle. Fine. Let's go down to a smaller time frame. We've been able to see, let's go to daily. We are still looking for supports and we will have a clearer picture. Now at daily, see that same level is playing here. Resisted here, resisted here, resisted here. 1, 2, 3. It doesn't allow price to go here. And we still have what we call higher lows, but no higher high. So at daily, either you stay out of trouble or you now look for a range between a resistance and a support that you can stay there and make money. So we now look for support here. Let's connect any low that can actually give us, this was a support, it was a resistance here. I'm looking for history and see if history can repeat itself. Can look at anywhere here. I'm just looking for where I can call a level that I can trust. 9521, connecting here, that's fine. Can I make it something? Let me look for number, round number, 95. What about 9500? 9500, 95. Don't worry, I'll get it. 9500. Like round numbers. 95 is okay. Okay, fine. So at 95, you see that it was supports here as at when it was support. History repeats itself. Why do I go for history? This makes you to value a given support or range, because support must have history, resistance must have history. Support, former support, support, resistance here, 2015, support, and resistance, history from 2015. So at least 2015 to 2017, we are still in this range. Sell, buy, sell, buy, sell. So let's actually calculate this. This is when price entered back into this range. We bought to here, had 800 pips. When you detect a range, it's also another time to buy and sell. Sell here, about 800 pips. Buy here, the range again, about 800 pips. And it's also back on its way down to where? Either here, being the horizontal support. Take note, horizontal support, and or the diagonal supports. The diagonal support is this. The diagonal support is this. Let me put it well. This is daily. On daily charts, we spotted this. You can get it well. We connect this to any available low and project into the future. So we connect this to this and project it into the future. This to this. Project it into the future. Take note, my business is from point A to B, and this one is just occurring. We just saw it. Now we have gotten resistance with history as far back as Abraham, and we have also found a support. This is a range of about 800 pips. We have gotten that. So now, when you meet price on the way up, you sell high. You meet price on the down, you buy up. Sell high, buy low. Now that we are meeting price at a crossroad whereby this diagonal support is playing on it here. Meanwhile, we have our horizontal support about this level. What do? It is only the fib that can keep us while it is forming higher, lower highs, lower lows. That could help us to be catching every movement. Inside this big A support and resistance, there are other smaller support and resistance. With your eye, you can see where price are rejected, upwards or downwards, supported, rejected, supported. There are other ones. So when you get this, you can go to any time frame you like and start doing your trades. But seeing price at this level, you will be confused on what next to do. And now we see that it has broken out of here. So what do? We go to smaller time frame. We start now looking for candlesticks. We can zoom in to look for candlesticks. Can start looking for candlesticks. What do we see here? At H4, we are able to see price falling as an Irogo tree and trying to consolidate here. And now price had also fallen again, broke this line, and is retesting this line. When price breaks out a support, be it horizontal support or be it diagonal support, it has to retest. it has retested it. Either for those that waited for the price to break out to start selling, please take note, I want to establish a point here. Either for those that waited for price to retest. Why do people wait for price to break out and retest? It is because they want to avoid what is called false breakout. I don't know if you have heard about false breakout before. I don't know if you have been a victim of false breakout before. It is because you did not wait for price to retest. Price breaks a support, it must retest. Price breaks a resistance, it must retest. That's why you have to wait for a breakout, a retest before you buy, forming higher high, higher low retest of the former broken resistance, and you buy it in again. Now, for those that were conservative, waiting, what they will wait to see is what? Either price returns here and gives us a bearish setup, we can start selling down. But if price breaks out here and decides to get into the broken support level, let's see what happens here. Let's keep using our tool so that we'll be familiar with it. High to low. Our 61% is still inside here. Our 50% is still inside here. So, why are we buying? We bought to my own system, apart from the daily swing trade. Just want to tell you, give you information. Apart from the daily swing trade, I would buy and stop here. Remember when I was teaching this at class, I told my people to buy. If you are buying here, buy towards here and wait for the price. We cannot tell price what to do. It is price that does what he wants to do, and we follow it. You trade what you see. Now in this scenario, there is no sell signal yet. There is a breakout, and we are waiting for price to retest this level and give us a sell signal, then we start selling. But when price breaks out and breaks in again, this is the point I want to establish. When price breaks out and breaks in again, we are out of that business. The trend is about to change. You may be confused at this. What I mean is that in a bearish trend, a triangle, ascending angle, or descending, whatever angle is formed, we have three types already. Ascending, which we have seen here. A triangle is when price is forming lower highs and also forming higher lows. Triangle, where you can plot a bearish trend line and a bullish trend line simultaneously, and it may have a meeting point. That's a triangle. At any of the angles, or be it pennant or flag, whatever it is called by your own terminology, please take note. Price must break out first on the direction of the trend. When it has done the breakout, it could be called a false breakout, because when it breaks out, it will break in again. Why conservative traders are waiting to avoid false breakout? They are waiting for price that broke out to retest, form a bullish setup or a bearish setup, they continue. Then while they were waiting, price broke out, and instead of retesting, it entered into the range or the triangle again. When that happens, please pack your load from here and come back here, because the trend is about to change. And if anything is there to help you witness a change of trend, congratulations. Why would the trend not change? Have you heard the speech Mr. Trump spoke this evening? Have you watched out the results of so many things that comes out? And what do you expect tomorrow? Have you seen the policies he's making, though it is criticized? Have you weighed the economy of the US? Why would the trend not look for a way of changing? How can US dollar be so weak since year 2000? Since 2000. No. These are the things you need to know, the sentiment, the fundamentals now. So this guy has broken out. So what are we looking at? We are looking for a retest to sell or a break in, whereby the bulls would score a point by taking this high. When bulls take out this high, they have scored a point. That's why our take profit on the daily swing trade is here. The daily swing trade gave us about 400 pips. The entry price, the take profit, 200 at 290 something pips. Remember, this is the resistance level. If the price breaks in here, I can decide for the sake of classes, allow this position open till whenever we come here. It's not much. It's only 600 pips. It's not much. And what are we expecting? If the sentiment of the United States, the interest rates, if it is raised by next 2 weeks, we are getting out of this nonsense. Since 2015, we are tired. If it happens. If it doesn't happen, then the music continues. If it doesn't happen, the music continues. The 2000 journey to the south continues. That is how to analyze the trend from bigger time frame to have, okay, that's how to analyze the bigger time frame. Remind me before I end the session. So now I have done the analysis up to 4 hours. We are now looking for trading opportunities. I want to trade a smaller time frame. Fine. I know that the trend is bearish from 2000. Any business, I don't care. I know that the resistance is at what price. I wrote it down in my paper. The resistance is at 1.0346. Fine. When I saw myself here, my plan was to start coming down. When I see myself here, my plan is to just start coming up until anything breaks out this way, which you have been heading here, or anything breaks us out this way, for the price to form a higher high for the first time. Higher high for the first time since when? Since it started this movement at 2015, we have no higher high. It concerns you, it concerns me. If we must have a trend, it must be higher high, higher low. We had lower low, lower high for so many years. So we are expecting a breakout at the top or a breakout of the support at the down. Whatever price would do, you don't have a choice to stand one side. Change your club side. Any moment, any club side wins. If the bulls take us back into this ascending angle, congratulations. We are back. We don't support bears again. We support bulls. If it continues down, we did not say it. We were still for the bears. That is how to be profitable. You don't have to have a stand. Now, let's proceed. I don't have any new person that asks a new question. Let's proceed to discuss fundamental. I've not completed this. Where do we make trades? We have a buy signal already. It came in last night. I think the buy signal was also here. Let's check. We had a buy signal. Where do we have a buy signal? We're seeing my screen. Buy signal. Can you see the scanner?
Not yet.
Not yet. Okay, let me see how I can share the scanner with you. See how I can share the scanner with you. I've overstayed on screen and okay. Let me share the screen. Ooh, share screen. Where am I? Okay, scanner. Can you see the screen?
Yes.
Okay, so we had the pounds USD CHF, USD CHF D1. This is what we call swing trade. That one you saw, this pounds Australia, it has already taken like the third profit. The scanner gave us this trade. The harmonics is working based on Elliott wave count. The harmonics is working based on Fibonacci 2. The same thing we are using. Those are the two things the harmonics is working with. Now on the daily chart, 10 o'clock candle was here, meaning that we have gotten an entry which is active. Our entry price was 0.9709. It's not late. We entered from here last night. We are already at the actual entry price. Our stop loss is 9512. Why is it that wide? Because it is a swing trade. Number two, we have two types of stop loss. There's a stop loss called volatility stop loss, and we have the normal stop loss. Volatility stop loss are used during fundamental days and weeks. Fundamental trading, you use volatility stop loss. What I mean, if you are supposed to trade 0 to 20 pip stop loss, when it comes to this period, your stop loss can be extended to 20, 40 or 60 pips. Rather, your lot size that was supposed to be 0.08 will reduce to 0.04. That is the strategy for news trading. Like tomorrow, you cannot enter trade with 5 pip stop loss or 10 pip stop loss. The margin alone will take you out. Margin alone. So this is a trade we have about 200 pips cooking. Let me see. It's like me, I took the second take profit. At this take profit, we may have more than, we may have a lot of pips. 0170. Can have this, taking note of them, and we have gotten that. It confirms our bias. We have another setup here. Is it new? Let's check. Is it bearish? If it is bearish, it's good because we are already selling it. Okay, fine. We have a sell setup here, and this is also one of the trades I have on my open positions. It's bearish already. It's also a swing trade. We are expecting it to give us, Euro GBP has a lot of pips to give us. I forgot it offhand, but I have it on an open trade. Our entry price is 08733, 8733, stop loss 8801, and take profit 1, 2, and 3. Take profit 1, 2, and 3. Then we have Australian, New Zealand. What is it trade? If it is buy, good, because I'm hoping to buy it soon. I have a buy position on Australian New Zealand dollar. Let's check what the setup has. You can refer to your own scanner. You have it. It's not loading. So now, what are we discussing? The news for tomorrow. Friday, 1:30 p.m. Canada will have a trade balance. United States will have average hourly earnings. And the most important ones are these: employment and unemployment rates. Unemployment rates in America had reduced to only 4.4%. Only 4.4% of the American citizens are unemployed. Only 4.4%, not up to 10%, compared to Nigeria. And last month, 211,000 outside this farming sector had dropped, but the forecasters have forecasted less this month. They say 186. So we are waiting for tomorrow to have the actual. Mr. Trump just spoke before we started this. he mentioned this. And from what he's saying, I don't know, between the forecasters, how did they get the forecasts? Let's see the details. This is vital to economic related. Job creation is an important leading indicator, which accounts for majority of overall economic activity. Non-farm payrolls, NFP. Change in the number of employed people during the previous months, excluding the farming industry. If the actual is greater than forecast, good for currency. Which currency? US dollar. So that is what everybody in the world is waiting for tomorrow to make money, from it. So you should also be ready to make money from it. Now look at the history. January 6, 2017, it was negative. February, it was positive. It was forecasted 170, we had 270, 227. It was forecasted March 196, we had 235. On April, it was forecasted 174, we had only 98,000. That's why it was red. Now in May, last month, it was forecasted 194. But when the actual came, it surprised everyone. It was 211. Now, for tomorrow, 1:30 p.m. Nigeria time, it has been forecasted only 186,000. But tomorrow, we are waiting for the actual. If the actual is good, better, greater than, this is a greater than sign in mathematics I was taught, actual greater than forecast. If actual released tomorrow is greater than forecast, it will appear green here. And if that happens, you can go to rest that your sell on Euro USD will pay you pips, that your sell on pounds USD will pay you enough, that your buy on USD JPY will give you enough money. Where US dollar is a base currency, it will be buying. When US dollar is a quote currency, it will be selling. But sorry, if actual release tomorrow is opposite, less than forecast, it will be red. And when it is red, you will not catch Euro USD, it will be buying. Pounds USD will be buying. USD CHF will be selling. That is how fundamental affects our trading. But take note, if your trading is based on bigger time frame, especially these days, we did it from support and resistance we have, is from daily, from weekly, from monthly. The only thing price can do when we have news is to move price from the support to resistance, from resistance to support, not 1 hour support and resistance. It will break that one, it will break it, it will destroy. You will not know. The only one that will be respected will be the bigger time frame. That's why we took our time to identify it from the bigger picture. That's why we took time to do this analysis. What can happen is, what is possible is news can come, take us back to support. The same news that took us back to this support immediately can take us back to this resistance without delay. Or the news can come, take our profits here and form a lower high and return back to support immediately. Those are the effects of fundamental, not 1 hour support and resistance. That's why you need multi-time frame analysis. You can make your entries at any time frame. As it is now, my stop loss must be outside this level. According to what I'm teaching you, stop loss should be outside support and resistance. Yes?
Hello, sir. Okay, Mr. Alban. Hello,
Yes.
Mr. Alban.
Yes.
Yeah. With this anticipation of the news, is it advisable for one to still place trade?
With the news, people.
Or do we still hold on and then watch?
Okay. Let me answer your question. Thank you for the question. On news trading, what we do is this. How to trade news? News has different strategy to trade it. We have pre-news trading strategies. We have actual news trading, and we have after news trading. Any of the three that you are good at, you can trade. What happens? Let me discuss what I know about news experience now is that when it is news time, price will be looking for support or resistance. It could look for the support or resistance of the month, or it could break it. That place that we have triple top since 2015, triple top, it refused to allow price to go. It can jump up and get another top there or break it. Now, we are so happy that we have succeeded to break out this guy. Or if price came to meet, if the news came to meet price at support, the support that had been there since 5 years or 10 years ago, what news would do is to pick up the price from that support back to resistance. So wherever we had clusters of candle was suffering, spinning top, short candles, call it dark something crows. We have the white soldiers, different names of candles. They were just clustering there, short spinning top, dojis forming up and down. When fundamental come, all those nonsense ends. So you trade pre-news, the propaganda of the news would start affecting the market, and price in most cases discount this news. Technical analysis takes care of them. But the problem is that you are doing your analysis only at 15 minutes and 1 hour. You cannot even know what is monthly time frame saying. Where do we have support? Anytime you play your game and get to that level, you come out like you were swimming and some other person was diving inside the water. When you get to the wall of the swimming pool, you have to stop the game there and turn back. Either you play at that end of the pool or you swim back. We are retail traders. We don't have the power to break support or resistance. It is the bigger boys, the institutional traders. Those ones are the ones that can actually help us break it for us. Or that when they finish the breakage, we move our loads to the next room, which is another support and resistance, which could be called a range. So by tomorrow, you cannot run away from money, but if you know you cannot manage your emotions, you stay out of trouble. But if you know that every situation is for you to make money, you have to take risks and make money. And when you are taking risk, please take calculated risk. When you are taking risk, ensure you are not against the trend. When you are taking risk, ensure that you are not selling at support. Ensure that you are buying at support. Ensure you are selling at resistance. Buy low, sell high. When you have obeyed all the natural laws of trading, which has to do with supply and demand laws, the theory or the laws of supply and demand. If you did not do economics, go and look for it. You can Google for it. That is what we are using to trade. Get known about the trend. Get know about supply and demand, which is support resistance. Get know about what else? The Fibonacci tool can help you to detect if we are looking for C or if you are looking for D. That is exactly what price will do. It will not do something else. It's only when you don't know what you are doing that you are afraid. It's only when you place stop loss inside A and B that anything can happen to you. If your stop loss is outside A and B, or your stop loss is outside support and resistance, you will have no problems. People will be clapping hands for you that you have the courage to trade non-farm payroll. I think I've done much today. Do we have any other thing? I want to end for the day. The one video is there on my Facebook page. The 2 video is there on my Facebook page. The 3 video is there on my Facebook page.
Hello,
All,
Mr. Alban.
yes.
Hello, sir. Please, that analysis of a non-farm payroll, where we were talking about a real, actual and forecast.
Yeah.
Please, please just summarize that area once again, please.
Okay. Okay. Check on our page. Okay, I said at forexfactory.com, Abi?
Yes, sir.
At forexfactory.com.
Yes.
Okay. When you go to, are you at forexfactory.com now?
Yes, sir.
Okay. Have you seen, what is the time frame? What is the time you have there? Is it the same time with your computer?
Yes, 10:51. No, it's different. I'm having 10:51 on the.
Are you on Friday now? Are you at Friday now?
No.
Which day are you? Check Friday. Just choose Friday or you choose tomorrow.
Okay. Yes, I'm on the same page now.
You are
With
Friday.
the name, yes, 11:03 now.
So 1:30 p.m. Is it the news? Is it the same thing?
Yes.
Mr. Alban, we are not seeing it, oh.
He's the one doing it, not me.
Okay.
Let me share
It's
my
1:30 p.m.
It's
1:30 p.m.
Okay, it's correct. Let me check my own.
There I have Canadian dollar, I have US, Canadian dollar 2 Canadian dollars, followed by USD.
That is Friday.
Yes, sir.
Wherever the noise comes from, please mute the noise. Tomorrow is Friday. Okay, that is Friday only. Now on Friday, we have this. Trade balance, labor, non-farm payroll, non-farm employment change. Actual forecasts. Actual forecasts. Let's check Thursday so you can understand what I mean. This is tomorrow,
Yes.
is today. Today. Fine. This is today. 2:30 a.m., which I mentioned yesterday. We had the red folder is our concern. Why? Because it is high impact expected. High impact expected. Currency, the currency is Australian dollar. And this is the time. What is the event? Private capital expenditure that has to do with inflation, retail sales, and the previous one of last month, the forecasted one, by statisticians. When you hear that statisticians are selling outside Nigeria, statisticians are more expensive and selling because it is their duty to do all these on weekly and monthly basis. So they are the ones that give these forecasts. Now, when the actual news comes, let's see the details here. Open details. The news is from Australian Bureau of Statistics. Change in the total inflation adjusted value of new capital expenditures made by private businesses. Usual effects. Actual, greater than forecast, good for currency. Which currency? Australian dollar. When actual is released and it is good, better, greater than the forecasted figure, it will be good for Australian dollar. What does it mean? In a currency pair that Australia is on the left, those currency pairs will be buying. In a currency pair that Australian dollar is on the right, being the quote currency, that currency pair should be selling. That is what we mean good for currency. Now, in a mixed release like this, that in February it was good, March it was bad, bad, all bad for currency. And this news is released quarterly, about 55 days after the quarter ends. So it's a quarterly release, checking the inflation of that country every quarter. They are checking the inflation. For the past 4, 1, 2, 3, 4, it was all bad. It was all bad, all true. Now, when it came to 2:30 a.m. this night, it was released. This time, it was not bad, it was not good. 0.4 is not better than forecast. That is why AU had to go back up, reacting to the news. AN go back down. It moved up before and returned down. Mixed reaction. Now, what helped Australian dollar now is that the sales, retail sales, became positive. Same Bureau of Statistics, change in the total value of sales at the retail level. Actual greater than forecast, good for currency. The strength AU Australia now had was from here, and this strength cannot hold waters as far as tomorrow is concerned. As far as tomorrow non-farm payroll is concerned, the strength does not hold waters at all. The trend would not, everything is waiting for tomorrow. So that is what we expect tomorrow. If you have Bloomberg TV, you can watch the release immediately it is released. You can have Bloomberg TV on your DSTV or on Star Times. If you don't have Bloomberg TV, you have to wait and refresh this page, or there will be something like green for it to refresh to have the release. By that time, most people have taken their decisions in or out, buy or sell. That is the explanation I have that I can give at this moment. I have more advanced ones, but I cannot give it at this moment because my timing for today is already up. We are spending 2 hours per day, and I am working almost 24 hours online here. For the past days, I still be here with you. Tomorrow is Friday, non-farm payroll. I would not, after tomorrow, I'm not sure if you are meeting tomorrow in the evening. If I have a convenient location, even at the trade house, I may drop a link at the WhatsApp chat room. If you did not join the WhatsApp chat room, you have to join for this project. Should drop a link for us to join Zoom during the news if I'm in a comfortable location. but I hope to be at the trade house tomorrow, trade with others on screen. At the trade house, we have enough facilities here in Abuja that can help us trade the news, help us participate in the news. So I'll be with them tomorrow there. I've been 2 days out of the trade house. If I have a comfortable location, I'll drop a link and whoever can join to see us analyze the news and see how we can trade together. The essence of this program is let's make money together. And we must achieve that aim by making money. I've given 2 scenarios. 2 possible scenarios is get an equity, open another account, put small money there, move from your $10,000 account, put 1 or 2,000 there, move from your $4,000 account, bring $500 there. Keep that account to trade news and trade news on it. Don't trade news with your entire equity. Calculate everything. Take note of my words. Look for bigger time frames, support and resistance. Confirm the trend. If you can catch me, if I give you this, if you can catch it, it is a strategy. Check if before the news is released, the price is at resistance level, get ready to sell. If at release time, the price is already settling down at support, get ready to buy. We buy low and sell high. There's no difference. The difference is that the fundamental will give us a speed faster than usual. If before news release, price is at resistance, get ready to sell. If before the news, price is at support, get ready to buy. If just before the news, price is at the midpoint between support and resistance, wait for the news to finish. That is a salient point I can give you at this moment. Ask for my number. I give you this number, and I will prefer WhatsApp. I will not prefer calls. I don't pick calls, and I'm not good at picking calls. Truly speaking, I check messages and respond after a long while. There are times, as far as trading is concerned, when you get to this point, you will understand that in trading, you don't need to chat at always. You don't need to talk always. You need a little bit of concentration to be able to marry the MT4. Not at this level. You don't have issues. I'm having issues because, truly speaking, I have so many things on me, teaching you, teaching others on site, teaching people on phone, answering questions. I have a big team beyond Nigeria. Under my team, I have to attend to each team, different locations. I work all through the night for teams outside Africa, and that is how it goes. You see my eye, I'm feeling sleepy, I'm not still going to sleep. When I leave this place, I'll take my coffee, I sit up. So please, the number I'm giving you is mainly for WhatsApp reasons or purposes. If you message me, can drop you a WhatsApp link, then you join the group chat. For me, I'll prefer messages on WhatsApp than calls, please. Understand? But that doesn't mean you should not call me. If you call me, I pick. If you call me, I don't pick. Understand that I told you earlier. I do pick calls. I do pick calls. Thank you very much for today. What other question is here?
Mr. Alban.
Is the location of Trade House in Abuja? Wow. Who would answer that? I'm not familiar with the city. You can check that at WhatsApp group. I think we have someone that could answer that. That would be Charles or Ndudi. I've seen them in the house. You check that at the group chats. That will be given out for now. Please can you drop a link by email instead of as I usually do, please? Immediately I update the link. Immediately I update the link for this meeting, Zoom will send you a notification. I did that last night. I'm going to do it again this night for tomorrow. But I'm doubting 9 p.m. may be too long. We have to do a brief thing tomorrow, like revision of what we did this week. I'll try to see, but I'll set my time at 1 hour to rush through the whole thing we did for the week, check the positions, the trades we analyzed, and conclude for the week. And next meeting will be on Sunday. So for now, immediately after this meeting, I'm going to update. Except you are suggesting I should update tomorrow. Immediately I'm done with the update for the new date, Zoom will send you a notification. So always check, okay, for the non-farm payroll, that would depend on my location and if I'm with my laptop there. If I have my laptop, it's not a big deal. I can drop it. And I have to plan to be there with my laptop. At the trade house, I'm always at training. I'm always training. I don't have time sitting down. But tomorrow I have to find a place and sit down.
Mr. Alban.
Yes, sir. I'm hearing you.
Thank you very much for the meeting. We appreciate everything you've been teaching us, and as improved us, we understand why we're asked to sell a certain and buy at a certain place. But I need you to analyze this to me. Like I've been holding a buy position on USD USD Canadian dollar.
Okay.
And I want to know if looking at it now, I don't know if it's going to sell, but I want to know if it's still safe to be on trade.
Who is speaking at this point? Please, whose voice was that? That's the same question that was asked yesterday, and we did this. There's not much, we can still keep doing that. Ensure that your open positions had been, the risk had been closed. Now I don't have any risks. I have 2 open positions that are all in profit. I may wish to take out one. Let me check. The 50% is, okay, I'm within 50%. I can close this one. I can bring back my stop loss for the down one to below here. I'll bring down the stop loss for this one. I'll bring it below here. I can close this one in case this is coming to form a C here. We keep forming ABCD. ABCD is a normal thing. If the news is taking us to the upside, this thing can come back down. If the news is, it can stay around here waiting for the news. Let's check what we still have left between this support and resistance. We are yet to move up to 50% of it. We are yet to get to even half of this, support and resistance, by 300 pips. Whatever news will do tomorrow, it will either move us back to support and take us back to, okay, this is the current support and resistance. It could either take us back here and take us here, but we are expecting a breakout to the upside. We are expecting a breakout to the upside towards this other resistance. We are expecting a high higher than this high. This is the daily A, B, C. We are expecting a high higher than B. That is how the theory works. A, B, C, D. News can bring us back to A to give us double top, but we don't change the trend. When news comes to change the trend, it can out the A. So for now, we cannot change our bias. If you have open positions, manage it. Manage it. From my position here, I'm expecting to have a drawdown somewhere here. So either before the news, it will pick me in, bring me back to this, and get ready to spike up. Anyone, even if it goes down, I'll be around, I'm around. I know my support. At least I know my resistance and support. I know where next. If it breaks this one, it's going somewhere else. If it breaks this place, it's going to our 161.8. I'm okay at that. It's going to our AB equals to CD. So there is no reason for us to think this way down. For now, we don't have a reason. Considering the trend. Remember that the trend is a chairman. Trend, considering the trend from this point, 2016, May, this one out daily. From here, 2016 May. From 2016 May, we had a bullish trend forming, price forming higher highs and higher lows. So bros, the trend is not changed. The trend only will change when we are back downstairs. So whatever we are targeting, we should be targeting up A, B, C, D. Could be, the news can take us higher than D, or the news can take us back to resistance level. We take us back to resistance, fine. Even if it is resistance, as at now, I can't change my bias. Rather, I'll keep buying low, sell high. Thank you very much for that question. I think we can end up for today. Thank you for always coming around. Try to practice what we are teaching you. You can practice at demo account. I know Deborah practiced yesterday at live account and was successful. You can trade it at the live account. If you trust the system, get familiar with the system, and you will have no issues. Thank you very much for the day. Check your
Thank you
mail.
very much.
Check
God
your
bless
mail
you.
for the next interview.
Thank you very much, sir. We appreciate.
Okay, bye-bye.
Thank you. Good night.
Good
Bye.
night.
Good night.